What's going on, everybody? Welcome back, man. Happy New Year's. It's 2026. We are getting ready for an amazing trading year ahead of us. Getting into our second year again with Trump in office. So it's going to be interesting. Volatility should pick up as we get here after the holidays, especially after January 4th. So no, we'll be back sitting together for our regular weekly overview this coming Sunday. As you all already know, ITU Rise is coming up January 14th, and make sure you secure your ticket. It's going to be very, very important that you guys attend because it's going to set the tone for the entire year of how we make this thing happen and get you guys in the right position. Whether you're funded, whether you're in demo, whichever position you're in, we want to make sure you're starting the right way so we can get through this year effectively. And understand all three pillars got to be in order. Okay. Your economics, you want to have that in order, understanding what you're looking for and how you're going to apply it each and every week. When it comes to your technical analysis, again, I'm looking over each and every week, preparing myself for what is coming. So I'm not putting myself in a position where I'm just taking trades out the wazoo for whatever odd reason. Nope, we're prepared. We're planned this out. We're going to do this the right way. And then lastly, the big dog mindset, right? Making sure our mindset's in check, making sure we're going in and have our plan on how we're thinking, making sure we're aware we're here and focused to get things done the appropriate way. We're going to follow our plan. We're going to journal every trade, right? I know it sucks. I really do. I understand what's the word I'm looking for, right? Tediousness of it. Yeah. The tediousness of it. But it's mandatory because it's going to put you in the position you're trying to be in, right? In the long run, it's going to make sure you're following this to the T and you're treating your trading like a business, right? We just heard a student talk about that. If you haven't yet, the release will be out tomorrow for Josh's run on his $200 account. So make sure you check that out tomorrow. Now, other than that, we're going to get into the overview today, right? We're going to look at some of these charts, see what's going down, see what news is coming up ahead of us that we need to prepare for out the gate, and how we can align ourselves to make sure we're on the right side of the market this coming season and the first quarter of the year, especially with us going to be trading during the event. At least we get Wednesday and Thursday and Friday to do a little trading with you guys during the event. We can know how to prepare appropriately with you all. So that being said, you guys know I've got Mike with me. He's a man with the plan when it comes to the economics, brother. I appreciate you coming back with us again.
Hey, anytime. Glad to be here. Glad to be here. We got a lot that's to look forward to in 2026. I'm gonna tell you that right now, right, literally right out the gate. It's funny because I'm sitting here looking at Forex Factory right now, and it's like, well, if I look at Forex Factory, what do you mean? There's nothing going on for like the first week. Oh well, guess what? At the very end of the month, we could be facing something. So,
Hmm.
um, I'll just, I guess, hop right into it
I
with
mean, let's deep dive.
some of the things that are going to be important. In fact, we were talking about this literally right off screen. um, that I think one of the most important things to look at right now, people are probably questioning what happened over the past week, right? Because there was a lot of activity when it came to the metals. Um, I dropped a couple links within the chat in Discord. And what I want people to understand is this: there was a change because gold had reached its margins. So that's like when it pushed and it pushed, and we saw a big drop like a month ago. It had reached its market, sorry, not margins, its market cap. So they needed to expand the market cap. And when they expanded market cap, they turned around and they increased towards the end of December, they increased the margins. So if you're going to trade gold, I need you to be very, very, very careful now. When you're looking at the ask and bid lines, if you're looking like an MT4 carries those. Futures like Tradeovate, what I use, that doesn't carry it. Neither does uh, what's the other one that I was using that you're using? Step Up.
Wanda.
No, Step Up.
Oh, Top Step.
Top Step. Top Step. Yep. See,
Yep.
I forgot it.
Hmm.
Top Step. There's probably ways that you can add it in there, but the most common is when you looked on MT4, you would always see an ask and a bid line, a red line and a blue line, and it would increase at the time of new day, and then it would shrink back down, right? So like your margins would always increase at the opening of sessions for the new day, and then kind of get back to a normal size. But what that margin does is it doesn't allow you to become in profit immediately. That's the thing. Like you would need a movement. That's why every time you open, unless you catch a candle at the right perfect time, you will always 100% experience a little bit of drawdown because you have to take margin into consideration. So not every trade is going to go perfect, but not every trade is going to lose, right? You just have to take into effect what this margin does. You might actually have a perfect markup and a perfect entry and then still lose your trade because margined you out, right? If you're over leveraged on whatever you're doing, contracts or lot sizes, the margin has taken people out left and right. I can't even be able to tell you how many people lost trades and lost money because margin had increased. So with gold, it's not just the opening of the new day. Margins increase for gold and silver and precious metals across the board permanently. So what that did, the result was people that were holding long-term trades on gold, they had a choice to make. They either added money into whatever trading account that they're using, whether it's Charles Schwab, whether it's E-Trade, whether it's their bank, whether it's Merrill Lynch, I don't care what it is. If they're trading gold, they had to actually add money or they had to sell off all their positions. What did we see? We saw a steep drop over the beginning part of this week because people decided, okay, I'm just going to take my profit. I'm not going to add any more money in, and I'm just going to, get what I got, which is fine because a lot of people probably made a lot of money off of that.
Mm-hmm.
But it kind of clears out for a new batch of trades to come in, right? And what's going to end up happening is that you're going to have some that are going to win and some have great entries and they have the margins down to where they can enter and hold. But then you got your ones with the lack of education that are going to over leverage, turn around and get robbed every single time and not know why. This is why. That's what I'm trying to tell you. Margin is going to become a very big factor when it comes to trading metals, period. So if you're looking at gold and you're trading it, even on the micros for futures, you're going to sit there and you're going to add in a contract and you're going to say, wait a minute, each tick is valued at X amount of dollars, but why is it going so much? Like, why am I in so much drawdown immediately? The margin is different. The margin is more expansive, but before you actually see your profit hit or your trade go into profit, you're going to see an extensive amount of drawdown. And I just saw it right now. Don't do as I say, not as I do, right? One of these type of things. So I already know the question, and everybody's watching this. Why are you even trading on Thursday? Well, technically it's Friday because it's Friday's trading day. But I saw something, looking at some of my confirmations, which you guys do know that I use RSI. RSI was way overbought, and it looks like gold's like, oh my gosh, I need to come down. And when it opened up an hour and a half ago, it opened up with a decent sized gap that needs to be filled. So if you paid attention to my message, as soon as the last big pullback happened, I was looking to sell down to 42.35. This pullback is happening. It's just not stopping. So I'm experiencing a little bit of drawdown, but the drawdown is far more expensive than what it was a couple of weeks ago. I'm not even going to lie. So if you're asking yourself or seeing something odd, the resolution to it, drop your contracts down. Not necessarily because of you're over leveraged based upon how many contracts you can trade. Like, for example, I was trading and still do at certain times 10 contracts at a time on the micros. That's $10, right? $10 a tick. Now those ticks, though, because of margin, they're valued more. So even though my contracts are $10 a tick, when you go from 42.30, let's see right now, 43.61.1 to 43.61.4, that's a bigger value than what it would be 2 weeks ago, even though your contracts are still the same amount. That margin portion plays a factor into it. So it can be a little confusing. I hope some of this makes sense, but that's your factor involved. So how do you combat that? Okay, well, I safely was using 10 contracts. I'm going to want to cut that to 5. If I'm using 5, I'm going to want to cut that to 3, just to be sure, right? Just to be sure, because one of the strategies that tends to happen, and I believe this is something, if you don't mind, I'll throw this out there, Zay. Some people will utilize one contract for the movement and then go into drawdown, experience the drawdown, wait to see the actual move, and then get in for a second trade and throw the boat at it. You know what I'm saying? Throw 4 or 5 contracts at it on the second entry. You can do that. That's fine. That's not a bad idea. It saves you from a lot of drawdown right off rip. You know. Though I would say the only reason why I don't necessarily do that is because if I enter my trade and I've got my amount that I have as my stop loss, I'm expecting that, where when you add more, your stop loss value is going to increase for 1. 2, if I walk away from my computer and I miss out on the second entry, well, then I just kind of screwed myself. You know what I mean? So it's just preferential. There's no actual reason behind it. It's just preferential. So all in all, just be careful when it comes to the metals. Drop your contracts down, drop your lot sizes down, and just stay safe, right? Like now for me, I can't use 10 contracts as much as I would want to, as much as I'm confident that I could. It's probably better that I use 5. Let's be honest, because margin is going to hurt me. Now my stop loss, with margins, my stop loss has to be like this when I'm using 10 contracts, when with, what I'm saying, my entry to my stop loss with 5 contracts, it's now this. It increases and gives me room to play with. That's all it does. But it keeps you safe. So that's one of the biggest things I wanted to address first, because there might be questions as to what happened with gold. This is why. The other thing that's happening, we have a possible rate change coming in January. And the biggest thing is that the government shutdown is looming again. When they reopened the government, what was it, back in November? They only are, quote unquote, keeping the lights on until January 30th. They're only paid through January 30th. Well, guess what? What happens on January 31st, February 1st, February 2nd? So if anybody's curious, well, what now? It's the same shit. I'm not even going to lie. It's the same thing. There's 2 sides arguing government spending and arguing healthcare, right? So we've talked about this time and time again. I think one of the big strides that was good, that's kind of a start here. I don't know if you guys have seen any of the news articles or any topics about GLP-1s. So GLP-1s are, easy description, Ozempic. Mm-hmm. We know what Ozempic does, right?
Mm-hmm.
It's supposed to lower your A1C, which
blind you.
Well, not just blind you, but it's a what's it called? It's a your A1C is directly tied to diabetes, and that's what these drugs were supposed to do, is to help you lose weight due to diabetic restrictions. Yeah. And people found that, oh my gosh, all I can do is lose weight on this thing. Now they're treating it like a weight loss drug, right? Mm-hmm. Mm-hmm. People are getting generic versions of GLP-1s. They're going to the doctors claiming that they need to get Ozempic left and right. So one of the biggest things that happened over the past few weeks since the government shutdown is that Trump has negotiated lower pricing for GLP-1s. Whether it's Ozempic or whether, like, that's a name brand, so you might get a generic version. It might be less than even what Ozempic is coming down to, but these prices are starting to be capped a little bit for certain things. So the reason why I say it's a good thing to see that is because you always have to have one brick in place before something gets built. And if we're looking for lower healthcare, we're looking for that lower healthcare push. This could be it, right? So we have to get these pharmaceutical companies under control. And that's where the difference is coming in right now. You still have liberal Democrats that are begging for subsidies.
Mm-hmm.
And you've got conservatives that are saying, no, we just need a better healthcare system. The unfortunate side is what you hear is Democrats this, Republicans this, right?
Yeah.
So the valid argument is that yes, prescription drugs need to be controlled, period. Big Pharma is making too much money left and right. Let's be honest. They make billions upon billions of dollars, and everything does is just a temporary fix, right? Temporary fix because there's no full cures for things like cancer. Let's just say there is, but they're not ever going to be released because there's more money in keeping the public sick. Let's be real.
Right.
So I don't know. Like I could
How do you
go.
think it's going to affect like healthcare stocks? Because I know I'm keeping a track on. Let me pull it up right now, guys. Give me 1 minute. So I forget the name off the top of my head. I've got United Healthcare eyes on it from an investment standpoint.
And I would bet that the way that you're looking at it is you're almost ready to buy it.
Correct.
Right? You're not looking to sell, you're looking to buy. Right?
Yeah.
The reason being is because two reasons. A, what I was going to get to within these subsidies, it's going to bring in a lot of money to these guys until there's a resolution for this healthcare situation, because the subsidies being gone, that now forces the taxpayer themselves, the employee at the job, they're going to have to pay the full amount for their insurance when there was a subsidy and that paid a percentage of it. Made it more affordable, right? But now all those costs that have been occurred over the past 5 years, nobody experienced, people are going to be up in a frenzy because their health insurance is going to go up 200%.
Mm-hmm.
You know what I mean? It's going to double and possibly triple in certain aspects. For somebody that was paying $300 for themselves, might end up paying $900 for themselves on a monthly scale. So the subsidies were there to alleviate a little bit of pain, but they were all temporary. And why was it temporary? Because just because you're paying less for your health insurance, that money, the amount that was being billed to you is still going to the healthcare company, except for the fact that there was money coming from other taxpayers to pay that. So it's not like there was funding specifically for, oh, this subsidy, we have money printed off, we're going to use this to help the public. No, they said, okay, you're going to get a percentage off. We're still going to pay the difference over to these healthcare companies, but that's going to be taxpayer money that's being used.
Mm-hmm.
Why? Why not just do something to get these healthcare companies under control? You know what I mean? So that's why I say it's a good site to see. By the way, I'm about to close my gold trade, bro. I'm about to take this L.
Things not looking good.
No.
Oh, okay. No problem. Yeah. I see what you mean.
Yeah, this looks like it's still going to come up for a little bit, I guess. I don't know. It's weird. I don't know. Maybe I might wait with this 5-minute candle. Anyway, where was I at? I was at the subsidies, right? So
subsidies, correct.
They're using taxpayer money to pay for the difference to these companies. Where's actually the savings? Because now you're hurting the whole economy by using taxpayer money to pay for these things. So the Republicans are saying, hey, no, let's get this stuff under control. When the Democrats are saying, hey, no, let's continue these subsidies because it's making it affordable. It makes me feel like this is going to show my political side a little bit. Like I can claim I'm an independent all day, and I do claim that I'm an independent because I can say I'm on one side for one thing and the other for a different thing, right? But when it comes to stuff like healthcare, I feel like there is a liberal Democrat agenda that's almost makes me feel like, you know how they use the term in bed with each other? I
Hmm.
feel like that liberal Democrats and pharmaceutical companies are in bed with each other and working together. Because why would you sit here and give a falsehood of saying your healthcare costs are going to come down, right? When these guys are still getting paid what they're going to get paid. It just comes from a different avenue for one, right?
Yeah.
And then you want to turn around and you want to sell it as we need these subsidies in there. Actually, we don't. We need healthcare under control, period. So when you have these arguments or these discussions back and forth, a lot of people don't understand and they feel because they're speaking from the feeling side and the emotional side that hey,
Hmm.
no, we need to have these subsidies in place. No, the bigger resolution is nip the shit in the bud and stop paying these pharmaceutical companies extra money that they don't even need. Like, come on now, what are
Hmm.
we talking about here? I understand that business is a business, but if they're a business that's a legit business, let's see some cures for some shit. That doesn't. That doesn't. Let's put this in perspective because we're like, oh, people will combat with well the COVID vaccine. COVID vaccine didn't do shit. Let's be real. But these guys got paid billions off of that, right?
Yeah.
So for an insurance company to cover those things, it now costs, and so that's more money that's going to go back to these insurance or these pharmaceutical companies in general. Period. But you have effects of these things. You have effects where it's now being said vaccines, the vaccines, the what measles, mumps, and rubella are leading to autism, right?
Wow.
So can we get honesty for one? Can we get cures for another? And can healthcare be affordable? That's a perfect world. So ask yourself, why wouldn't both parties be on the same page with that? It that's a question that begs to answer. And in that case, if healthcare means that much to you, you could find yourself questioning your political party. You know. So I digress from that position, but it's still looming. This was temporary. There was no agreement, no fix yet, but there's a
Mhm.
slight step in the right direction when we start seeing a major drug actually be lowered in cost.
Makes sense.
I don't know. We'll see what happens come January 31st. But if there's no resolution, January 31st, what did we experience in that first one? SNAP benefits didn't go out, right?
Yep.
Um, what else? There's quite a bit when it comes to government assistance. When the lights aren't on, they can't work. So if you're relying on government assistance, expect something to happen unless there's a resolution quickly. That last one lasted 45 days.
Hmm. Yeah. It was almost 2 months.
Yeah. So I don't know. It's weird, but that's what we're kicking the year off with. Kicking the year off with the shit. Let's go. Like but there's also it's not just those things. Like I feel like within the last government shutdown, some of that was to clean up SNAP benefits. Get a lot of people that they found that there's a lot of money that was being given out not only to illegal individuals but
Yeah.
also people that weren't even alive anymore.
Yeah. I mean, even in 2024, they had a big theft of SNAP benefits over, I want to say it was about the end of the year, end of 2024, somewhere in there, where people's SNAP benefits were getting stolen all across the country. Every like 2 months straight or something like that, or two periods straight. They were supposed to get their benefits. They got stolen back to back. So if this was to help in that regard as well, to kind of shut some of that down and see where the cracks are, then
And so be it, right? And do it.
yeah,
Like I don't
right.
see why anybody would have a problem with that. The only people that I
Yeah,
would see that has a problem with that are those that are on it.
right, right. But I mean, if it's
So
in the protection of them, then it is, I mean, it is what it is, guys. You got to go for that. But if it wasn't, and we're like, yo, money's really bad. The economy's in a place where there's these kind of issues going on, then that's another story.
So in this case, at this point right here, right now, it's January 1st. We have 30 days before this is going to happen. So if anybody sees this in the meantime and you're on SNAP benefits, guess what? We're warning you ahead of time. Prepare yourself in a different way.
Right.
Either look for a second job, look for a second form of income, do some side things here and there.
Yep.
Be creative, right? We're in a trying time right now where, hell, as of January 1st today, there's a lot of states that increased their minimum wages.
Mm-hmm. Yeah, so New York went to 16, 17, something like that.
Arizona did. Arizona's up to 15.
Yeah.
Minimum wage. And I believe we've talked about this quite a bit, but we do know what happens when minimum wage goes up. Everything else goes up.
Yep.
So you think prices are coming down now? They're definitely not coming down. Once minimum wage goes in and it changes, like, here's the thing to think about. Okay, when it's on the ballot, right? And your local county or whatever, even your state, throws it out there for a vote. There's still time, right?
Mm-hmm.
Once it goes into effect, that's it. So while we're sitting here praying, can the prices of this come down? Can the prices of this come down? And over the holidays, we saw gas come down. I don't know, gas was like, in where I bought it in Casa Grande last Saturday, it was $2.52.
Mm-hmm.
Like,
yeah, it's getting cheap.
I haven't seen it that cheap in a long time. Most of all the areas here in Maricopa are still at like $3.05, above $3. But regardless, we saw a drop in gas.
Mm-hmm.
Call it the holidays, but from Thanksgiving all the way up until even today, I've seen a lot of food sales, right?
Mm-hmm.
So it's almost like it was, okay, cool, we're starting to see a little bit of relief here. And then minimum wage goes into effect today. So we're not going to see anything change from here on out. Prices are going to be where they're at now. So you better get used to them.
Yeah.
Right? And it took this long, which is crazy to me because everybody, that's just, to me, when I hear people talking about, oh, minimum wage needs to go up, how can you live on this? Well, think about this. I wanted to pose this on Facebook because somebody had an argument about 15.15 minimum wage and why it needed to even be more. And I said, look, you're a business owner. You've got all this inventory, right? We're getting into a new year. What do?
Sales are on.
Hence the reason for Black Friday.
Yep.
Okay.
You got to get rid of product. You got to get rid of product.
If anybody thinks Black Friday sales are Black Friday sales because it's considered as Black Friday and that's all, no, you're dead wrong. You don't understand supply. You don't understand demand.
Yeah.
Reason why those things are so cheap, like why you find such good prices on everything, is because December is the end of the year when new stuff comes in January. In fact, new shipments start coming in December for January to these retail stores.
In 2026, traders cannot afford to sit on the sidelines. This is the year of the action takers, the year you make a decision that changes everything. At Independent Trading University, we build an experience that brings together what traders have been missing for years. Mindset that keeps you stable, economics that keep you informed, technical precision that gives you direction. One complete system, one community, one path to independence. From January 14th to 18, ITU Rise 2026 will take you through 5 powerful days of coaching, clarity, and next-level growth. This is your chance to level up with your coaches live, build your personal trading plan, and finally break the habits holding you back. General admission is free. VIP access is optional for those ready to go deeper. VIP $27 admission includes morning motivation with Daniel, pre-session Q&A 6:30 p.m. Central Standard Time, recording access for 7 days. Enjoy 7-day enrollment to ITU. Part of admission will be donated to the Grace Works program. Receive a discount on the ITU 30-day bootcamp. Digital copy of ITU Trading Guide $4,000 worth of value for $27. Whatever path you choose, one thing is certain. If you want 2026 to be different, this is where it starts. Register now at rise.myitu.org. ITU Rise 2026. The year of the action takers.
Anyway, I digress again. I'm sitting here watching this on my other screen. But it's to empty out the inventory, all out with the old, in with the new, right? So don't feel like you're getting something special when it comes to Black Friday. If you wanted it to be special, you would have bought it in January.
Right.
You know what I mean? So consider that, right? So think about this. Now, we're sitting here. We've established as a business owner, you have all this inventory.
Yep.
You got to make way for the new, out with
New
the old.
product.
I put it on sale, right?
Yep.
Well, what happens when people that are, let's say, off of a minimum wage price, they can't afford what you have? What do? You got all this inventory. You put it on sale.
Yeah.
You drop the price. You drop the price and
Yeah.
make it affordable, right?
Yeah.
So there's that factor involved that shows if we didn't increase minimum wage, retailers would be forced to drop prices because people can't afford what they're selling it for now. The combative argument to that is the suppliers, right? The suppliers of the retail items need to be paid. Now, you understand that certain prices for certain things have gone up over the past couple of years. Imports, exports, right? Tariffs, etc. So there has to be something that combats those costs. Okay, gotcha. You raise the prices. The consumer pays for everything. Now, people don't believe in trickle economics. Me, I do, because it makes too much sense, right? When it starts from the top down, guess what? It can also start from the bottom up when you're talking about the consumer side, right? And things can work that way. I don't understand why people don't see this as logic, but I believe it was argued against to get away from that because it truly works. Trickle economics. It can truly work. Okay. So what do I mean by this? All right. Let's take a retail space. I'm going to take a couple different scenarios here. Speak from two scenarios on both sides of a consumer and owner, right? So from the owner's perspective, right? They have to pay a supplier, right? The supplier then raises their prices. So they say, okay, I have to make this profit margin, which means the consumer then turns around and has to pay more. That's why you see prices go up, because usually the actual retail vendor has costs involved. Now, over the past 5 years, one of the caveats that we've seen is people just price gouging. We've seen that left and right. People are willing to pay this or whatever it is. People, the psychology of things has gotten out of hand. So outside of the factor of price gouging, a normal, honest businessman would turn around and say, okay, I'm getting charged this. I need to charge this. This person pays, right? So from the retail perspective, you got to think, if I can't afford this, then I have to lower this, which means I can't afford your supplies to sell, so you have to lower your price for me. See how that works? It can work both. It can work both ways. It doesn't, for whatever reasons. I guess, like, I don't know. A lot of people that are in the political system don't necessarily believe in it. When you speak from a employment side now, right? When you're talking about who gets taxed what, right? You're talking about the tax more, tax the rich more, tax the rich more. Okay. The reason why that doesn't work, we're going to see happening in New York, which we just had Zorhan Mamdani actually get sworn in today, which, by the way,
I did see
I
it.
don't, did you see it?
Yeah.
Did you see how he got sworn in?
I didn't see how. I was listening to it actually while Felicia was watching the fireworks.
Apparently, he got sworn in not using the Holy Bible. He was using
Are you serious?
the Quran. Mm-hmm.
Wow.
If you don't understand, whoever's watching this, if you don't understand how big of a deal that is, you need to do your research on why it's important to do the Holy Bible. Whenever you go into court, what do you put your hand on? The Holy Bible, right? I swear on the Bible. I swear to God, right? Like everybody, I swear to this. I swear. There's an impact to utilizing that, to where using the Quran almost makes it invalid because it's the only time it's ever happened. So anyway, I digress off of that topic.
Man,
Anyway, I
that's
mean,
a whole other humble.
well, and if the crazy thing is it can be an emotional trigger for some because you have a lot of military individuals that fought for this country, and that's a slap in the face. You know what I'm saying? Like, where are we? That's the whole thing.
Mm-hmm.
You're based one nation under God. So why are we giving that much power to the Quran in that case, right? Anyway, I digress. We're seeing the whole what I'm getting back to with the whole like tax the rich, stop taxing the poor type shit. Everybody needs to be taxed. The unfortunate side is that people feel that because an individual is a CEO or has 7 figures, 8 figures, 9 figures, whatever that they're worth, right, that they need to contribute more. Well, guess what? When you have a corporation, right? Let's take a corporation. I don't know. Let's talk Tesla. How about that? Because Elon was in the news for having like a multi-billion-dollar bonus given to him, right? When these guys are CEOs of companies and they have the responsibility of not only growing the company but employing thousands of people, I'm not so sure it's understood from the general public as to how that helps them. The more people that they pay out, the more they can claim on their tax. That's tax write-off for the company. So these guys want to employ people, right? They want to get people in these seats. Why? Because you're making more production, you're growing a company, and you're paying people what they deserve. But the argument always is tax the rich, tax the rich, tax the rich. That's not the answer, guys. That's not the answer at all. Because the more money that they end up having in their pocket, let's put this in perspective, right? If I'm and I learned this because I'm a business owner now, right? And I've seen this happen, especially when it comes to taxes with all the write-offs. You're never going to get away from the write-offs. Those loopholes are there for a reason. So there's a lot of things that the general public wants to happen to the rich people that won't happen because if they close the loopholes, they have to close them for everybody. And there's benefits to owning a business and having things written off because you can write off damn near everything. You can find a way to put certain things in certain categories as an audit and turn around and be perfectly fine. That's how Trump got away with a lot of shit. When he had a tax bill of like $750 one year, because he wrote so much shit off, you know? So they get to, when they have more money, they can put it back into their project. Granted, you're probably going to see them buy a few more suits or a few more Rolls Royces, but that's not your business. That's theirs. What they do with their money is up to them. If they have certain requirements that you're working for this individual, then guess what? You meet those, you're going to get a raise. Stop pocket checking the CEOs, and start looking at your damn self in the mirror and asking yourself, am I being paid what I'm worth? If not, I have the option to go somewhere else. If not, I have the option to open my own shit. If not, then guess what? I can actually work harder, right? And get a raise. Maybe I need to look at myself in the mirror and say, am I really performing? Because if I'm not performing, I need to step my game up, right? Stop worrying about the person next to you. Stop worrying about the CEO and just do your fucking job. Pardon my French.
The smarter thing to do, and since we're on this topic, is put yourself in position. If you don't like the position you're in, you can adjust. You can go learn the same things they learn to put themselves in the position and do what they're doing, right? This whole thing, like we can't access information and we can't start to make the adjustments in our lives to go in that direction. It's not too late. That's what's so important about right now. And you talk about how this is such a big move for the wealth gap, right? Wealth is now shifting tremendously all in the same period right now as we speak. And people aren't taking advantage of what's out there, right? Being able to set up your own businesses and use automation. Why are we not doing that? YouTube, you're not doing that. You're not even staying consistent enough with content to get yourself out there. You can do your own ads and your own commercials like any other big business that's out there. So now there's no more excuses. Now it's about taking the time out and learning, making the adjustments, learning, adjusting until we put ourselves in a position where we're living the life we want to live. Or for some of you, where you may feel like, you know, my time has passed, which is not true at all. But if you feel that way, if you have a generation after you have children, you can put them on game of a lot of things that's happening or pay attention to what they are doing. A lot of these current generations are already doing what comes naturally to them, and it's working for them to produce profit. You know what I mean? So a good thing is to learn, right? Study what they're doing. Put your ego to the side. Look what the kids are doing. Look what the teens are doing, because they're already making money in a lot of these areas that exist right now. That's part of the wealth transfer that we're seeing that's happening. And that's going to put you in a different position later.
Well, the funny thing is trading is a big one.
100%. Yeah.
So just because, you know, certain companies are now, I want to say, extinct, and there's certain individuals going through court cases and this, that, and the other, it doesn't mean that all those individuals that they took advantage of doesn't necessarily mean that they quit, right?
No.
Now, I don't really like how I worded that.
Okay.
Because there's a lot of companies that are out there that took advantage of individuals. There's a specific one I'll refer to as the mothership. That's the one I'm talking about. So they scammed a lot of people. They took advantage of a lot of young individuals. Let me get people to sign up and let me pay off of those residuals, right? The MLM portion of it.
Mm-hmm.
They were being trained and taught something that they didn't have. They didn't even know the tip of the iceberg of how to trade.
Right.
So those individuals, though, that experienced it, there's a handful of them that quit because all they could do was sell the service. There's a handful of individuals that probably went and started learning their own thing because they had a taste of what it was, and which is great. I don't want people to quit this because, shit, I've been doing this for 6-7 years now. Like, what? Like, there's money involved in it. Like, it's the easy. I'm not gonna say it's the easiest thing. It's the hardest thing to get through. But once you get to that point, it starts coming in, and it's a different story, you know?
Right. It's like any other skill set. Like that's the bigger reason. I mean, dude, Mike, when we came together and even sat about talking about putting a coaching program together, it was with the understanding of this niche has so much ugly. It feels good to be a light. It feels good to be in a position to say, yo, this is just about getting you skilled and getting you understanding how to execute in this arena and play at your absolute best. Like that's what it boils down to. It's how can we give you all the right information that's going to set you up to have the skill set down, have a plan for yourself, and be able to operate like a professional. That's all we look for out of each and every one of you guys. So when you show up here and you're like, dude, there's all these scams out here and there's all this stuff that's going on. Well, yeah, all of that is still going on, but that doesn't change the fact that there's money to be made in this niche. And if you work on it and you get yourself in the right environment, you'll be able to master it. But that does not mean that, you know, even if you're in, you know, I got to learn martial arts, every instructor isn't going to work for you. You don't think there's somebody that's calling some instructor in any coaching realm was scammed because they didn't get their way or was told, what have you. That doesn't mean that you can't get in the right position in that program.
I think
Fitness, same thing. You might have a bad fitness coach. Doesn't mean all coaching is bad. Doesn't mean all fitness doesn't work. You know what I mean? It's a
well,
crazy way to think.
that's a great point, because the easy way to think about it is literally like, it doesn't matter what the context is. If it doesn't work for you, it doesn't mean that it's bad or a scam
Yeah.
in general.
Yeah.
Right.
It just means you need to pivot.
It didn't work for you. You have to ask yourself, why didn't it work for me?
Right. And how many chances did you give it?
Right.
Right.
What was my effort that I put forth? Is the person that I'm working with educated enough?
Right.
Right. And literally, overall, just question what you're doing, because if you don't, you're just going to be sitting here calling everything in life a scam.
Pretty much. Pretty much. And there's a lack of understanding. There's tiers to this, right? There's every level of coaching that exists out there. So if you're at one level and you're like, man, I'm not getting it where I need to be, you probably have to level up. But that means you've got to position yourself by using the skills that you put forth so far to make enough profit to afford a better coach.
Right.
Does not mean the niche does not work.
Right.
Right. So we've got to be in the mindset of children, right? What people don't understand, man, put yourself back into being a kid again. How much time would you give a baby to walk? You know what I mean? Until it does it. Till it walks.
Exactly.
Exactly. So you have to be patient and be a little grateful, right? A little honest with yourself and say, yo, it's going to take me some time. I may not learn as fast as this person, that person, or the third. But stop comparing yourself, like we just said.
Right. Exactly. People just need to stay in their own damn lane, period. And that's something that we've preached for a long time. But I mean, I think that comes with accountability. Until you learn accountability, you're going to sit here and blame everything anyway. So
yeah.
Anyway, I digress on that part of it. Right, on that part of it. I'm sitting here trying to get people to understand why trickle economics does work, right? So when these businesses and these owners are turning around saying, hey, don't tax me so much, it's not because they don't want to pay the taxes. Nobody wants to pay taxes, but it's not because they don't. It's because they can have free money to spend more on the company because there's more write-offs, which bring them more money in the long run, right? So think about that next time you're voting for higher taxes, because the result where I was going to with the whole comparison to New York is what we talked about off of Mom Donnie's campaign, which was free transit, free buses, lower cost for housing, when really he has no authority over any of those things. His campaign was to do that because he was going to tax the rich an extra amount of money that he was going to add in that isn't being taxed to anybody else, because it's the rich's responsibility to take care of the poor. No, it is not. It is your responsibility to take care of yourself, right? What you do determines whether you can or cannot take care of yourself, not what somebody else does. If you're not being paid at a job, guess what? Go look for another one or look for a second one. It sucks that that's the economy that we're living in, but guess what? That's where we're at. That's where we're at. Thanks, COVID.
Yeah.
Thanks, COVID, which, I mean, that's a whole different topic, because there was a lot of stuff that was done during that COVID time that people thought needed to happen. And we talked about it in grave detail that none of the stuff that was done was what needed to be done. Stimulus checks were not needed to be done. No. Shutting down all businesses except for major retailers, that was terrible. Making people fear for standing next to another individual, no. Causing fear because somebody wasn't vaccinated with a vaccine that is now considered as dangerous. Come on now. If you're an individual that thought about these things during that time and you were on that fence, rethink, please, where you're at now, because those are the things that added in into where we're at now, right? Now, I'm not saying one political side is right and one is wrong. You can see, at least over the past 6 years, which one is playing us, in all honesty, right? There was only one political party that voted no to keep the lights on during the last one. So if you didn't get your SNAP benefits, there's only one political party you can blame, because the other political party voted 56 yays, right? So that one political party is also the one that continues to sit here and try and drum up drama. It's the same political party that Dr. Fauci supported. It's that he's the one that you can't trust him, because it's back and forth. Now we're talking conspiracy theories a little bit here. We're getting into some of these topics, but some of these topics are really actually out there, right? They're things that we have to understand before people and change before people make another decision, right? And it's only getting worse and worse. So we're sitting here talking about New York. He wants to tax the rich, and guess what the rich are doing? They're moving. They're leaving. We did that on the last episode, right?
Yeah.
We talked about that because Wall Street is moving from New York to Texas or Florida, and probably Texas, which I don't know about you, but that's one of the biggest things I've ever
Major.
heard.
Bro, I'm like, my mind is blown by them making that move, man. They have been in the same spot forever. So that tells you the magnitude of this.
Exactly. So with these millionaires going to be taxed and they decide to leave, and this is the plan. Like, this is just day one. He got sworn in, and this is day one of 4 years. 4.
Midwest,
Watch
Midwest, watch your prices go up.
Oh,
You're
yeah.
in the Midwest, watch the numbers start rising.
Oh, yeah, absolutely. Absolutely. Now, we can also get into that as well. I mean, I don't want to step on toes because, I mean, the topic is real, right?
Yeah.
The topic is real. The fraud that's out there is real, right?
Yep.
And I just don't want to be the one that sound like I hate sounding bad when all I'm doing is speaking truth, right?
Yeah. Yeah.
So, I mean, you see a lot that's in the news right now with government funding. Government funding is going to stop for a lot of things because there's a lot of things being cleaned up. Talk about Minnesota, right? So there are things that might be realer than what we thought, and one of them is a Muslim takeover, right? That's how it's being presented as. I use that term loosely, right? I use that term very, very loosely because I don't care whether you are or not. I don't. I don't. But when you start imposing your beliefs onto me, enforcing things, that's a different story. Then I have a problem with it, right? I don't have a problem with sexual orientation. I do have a problem with you forcing me to accept certain things that I don't believe. Right?
Yeah, stop marketing it. Stop marketing it.
So this is my point to this is when you look at any of the marketing towards any of this stuff and what's being put out there, it's quote unquote Muslim takeover. Right? It's been in Minnesota. It's starting in New York. And I want you to consider with those two states, what type of states are they?
Blue.
Exactly. So it starts somewhere and it needs to end somewhere. Right?
Yeah.
Now, some of these are like I said, like water cooler conversations where you got to be careful with how it's being spoken about. But there are some truths to some of these things that are actually happening in these streets right now, right? So 2026 is going to be very interesting, especially right out of the gate. We're going to, like I said, just to kind of recap here, we're going to watch what happens with another government shutdown. We're going to watch what happens with rates. We're going to watch what happens in the state of New York, period. We're going to watch what happens in the state of Minnesota, period. Which I know we didn't talk about that, but do you know what's going on in Minnesota right now?
No, I'm not aware.
So you can literally go right onto YouTube, or not even YouTube, but even go to Yahoo right now, and there's headlines for it all over the place. Due to an exposure of daycare funds for some of these businesses, these daycare businesses, government funding is on hold for up to $110 million. That was found in fraud.
Are you serious?
Yeah. So some kid, I forgot the guy's name, he was going around and went to multiple daycares, and these guys are getting funded millions of dollars at a time. There's nobody working. There's no kids. There's nothing there. It's just a empty room. And he's exposing these guys, and that's taxpayer money, by the way. Right? So if you're watching this and you live in Minnesota, know that your taxpayer money is going to fund businesses that aren't even legit. So the reason why I bring that up as far as why eyes are on it is because if it starts somewhere small, it's going to end up somewhere big. And if there's something like this going on in Minnesota, who knows what's going on in Texas? Who knows what's going on in California? Who knows what's going on in Alabama? It could be something else, but you're going to see government funds frozen for a lot of things coming up because a lot of things are being exposed. So that's why I say all eyes are on some of these topics, because there's a lot that's even going on just right here, right now, and it's only January 1st.
Freaking daycare fraud.
Bro,
wow.
Look into it. It's crazy. It's crazy. What's up, Jackson? So, I don't know. It's going to be a very interesting 2026. I'm taking it month by month, to be honest with you.
How are we looking with the upcoming Forex Factory items that we'll have in at least the first part of the month?
So there's not much. Like I'm looking at it right now. We have a manufacturing PMI on Monday. Nothing until Tuesday. There's AUD CPI, so AUD's inflation, right? That could move the US dollar, so keep an eye on that. And then we're literally talking about unemployment and employment. Like I don't even see, what is it? NFP isn't even going to be until January 9th. So we got a whole week for NFP.
Okay.
So after that, I'm only looking at, the 13th. So right after that, the 13th, there's USD inflation. So the CPI month over month, year over year. And then Wednesday is retail sales. That's the 14th. I'm looking to see ahead of time. I want to say it's probably the 21st. Nope, it's not the 21st. That would mean it's probably the 28th. Yep, there it goes. Wednesday the 28th, federal funds rate. So, ironically enough, you have the 28th, which is Wednesday. That's going to be the day that we hear whether funds or whether rates get cut or increase or stay the same. 3 days later, the government's going to shut down. Same week. Unless in the next 30 days they come up with a healthcare solution, but that's not going to happen. That's definitely not going to happen. So all in all, right now, when I'm looking at charts and I'm looking at movement, I definitely foresee in the macro timeframes, the US dollar continuously dropping.
Welcome to Independent Trading University at IT. We're more than just an education platform. We're a community built to help you succeed. Trading can feel like a solo journey, but with ITU, you're never alone. Our team is here to support, guide, and push you toward mastery. Technical analysis support, so you can read the charts with precision. Fundamental support, so you understand market-moving news and economics. Psychology support, so you can develop the mindset of a successful trader. We provide the tools you need to thrive: weekly live education, 24/7 community support, and real-time trading setups from experienced coaches. Wherever you are, access the education and mentorship that will transform your trading. Join ITU today and trade with confidence.
You can pull it up, yeah, if you want to show the chart.
Well, it's funny because we're sitting here talking about this, right? And I just pulled up DXY.
Yeah.
So DXY an hour ago had a smooth drop with a big gap off of the 1 minute. Here, I'll share. That's why gold decided to go back up. So, yeah, if you guys can see down here, I am currently in drawdown on my gold trade. But yeah, so looking off the small time frame, look at this. Boom, right there. That gap right there. And
Yeah.
it's continuous move down to go as oversold as it is. That's what
It's
caused
the same thing. Yeah. But we should see with dollar coming to fill that gap, gold coming to fill that same gap that we've got TP. So
exactly.
line
That's
up.
why I'm sitting here. I am holding my trade.
Nice head and shoulders on 5 minute on gold, actually.
Currently, I am in drawdown by about $400, but I'm just looking to cash this out here real quick. Although, if this could actually be the selling point that it needed to, because as we have this low, this lower high, this lower low, this could be the lower high that pushes this to the next lower low, which comes down to, if you paid attention in Discord, I said I want to sell it down to 42.38. This could have been that entry. So if you want to sell gold, like I said, be careful with gold. Be careful. Whatever lot size or whatever contracts you were using 2 weeks ago, cut those in half. Because the margin will kill you. But I kind of feel like this is probably on its way down for the time being, and I'm going to get out of drawdown here in the next hour. Anyway, let's go back to the DXY. Let's look at the weekly since we are on. Actually, we're on the first, so we can look from the monthly. So as we're seeing here, we see this bearish momentum kind of continuing. So we had this double top, higher right side. It's continued dropping. This is the neckline. It's been retesting, right? It's been retesting this area. Not enough for me to say I feel comfortable with it, but based upon what's down here, it's probably enough because all these wicks are kind of meeting each other. There is a fair value gap up here, so when this does go up, it's going to go up. Just not sure if it's going to happen now, because what we're doing here is we're seeing if it's going to happen, it's going to happen like right now, this month, because this is going to end up being a bullish engulfing, and this is going to be a triangle that will go either way. It's not ascending, it's not descending, symmetrical. Symmetrical triangles, when you see it like this, where it doesn't show a clear way of it wants to go, like a clear support or resistance. Should I go over that real quick, Zay?
Say that one more time.
Should I go over SAD real quick? Symmetrical, ascending and descending?
Oh, of course. Yeah, most definitely.
All right, so let's do this real quick. Symmetrical, right? We have both sides. This thing can go one way, all the way up, or it could come all the way down, right? One way or the other. But it's working off of this squeeze, right? The squeeze of the triangle. This is a descending triangle. Reason being is because we've created a support. We now have a bearish momentum, right, from the top of the triangle. So this, when done correctly, will break, because the constant variable that stays the same is the resistance, or not the resistance, in this case it's the support, right? So when you have an ascending triangle, you have bullish momentum within the consolidation. And in this case, the squeeze is happening. The constant is the resistance. So as it squeezes, it finishes and goes up, right? So when you see a descending triangle, you're looking to sell. Ascending triangle, you're looking to buy. Symmetrical, it can go either way. Got to be careful with those. We're looking at a possible symmetrical triangle here on the month. So with that being said, if this wants to go up, it can, right? And if that's what it wants to do, it could either fill this fair value gap that we had mentioned, which would be love, because if it goes up, that means gold will go down. Should go down. So it could fill that. Or it literally could just be retesting the neckline of what would be the double top of the shorter right side, right? All in all, you can even use this. You wanted to at least have it retest the 50% mark of the bearish move. We're looking for the US dollar to come up to here before it rejects, which is funny because that 50% mark is exactly where the fair value gap finishes. Funny, right? So let's hope the DXY comes up for a little while. In fact, they probably could end up coming up for a couple months. That just shows supply and demand. But all in all, for the year, I still think that we need to come down, because we are in a bearish. I mean, this goes back quite a bit, but it's just a bearish move, right? So this is your high, your low, your lower high, your lower low, lower high, and then your next lower low, right? If you look off of the monthly, and I want to say it's at like a 78 something. We looked at this at one point. There's a gap down here that needs to be filled. Oh, where was it? I'll have to go back. I'll have to find it on the small time frame. But I don't know. We'll see kind of how everything goes. We'll play it by ear off of the monthly. This, I would hope, would come up. This would coincide with, because when you look at the RSI, we were sitting here bearish this whole time off of the weekly. This is June of 2025. We started to come up. We broke the 50. This could just be a pullback to come back and retest the overbought side of the RSI. So if the US dollar wants to follow protocol as RSI shows, it may continue up for a little while as a pullback, but overall we're still bearish on the higher time frames. The daily, all we're getting down to is breaking down what those candlesticks kind of look like. And look, there's a gap right here. There's also fair value gaps all the way up here. So I guess I wouldn't necessarily mind for it to come up for a little while, especially now because I'm in more drawdown than I was before. But if we can let DXY come up, that just shows to me demand is going to get higher. Demand going higher actually kind of coincides with what we're talking about here, where, SNAP benefits, the government shutdown, minimum wage rising, prices staying high now for good, it could really be a pullback before we really start seeing another drop down. So those factors involved, CPI, interest rates, right? Those are all going to be part of pullbacks for the most part. So what we ended up seeing, CPI coming up here on the agenda a little bit. Well, before that, what if it breaks this area? CPI drops. Well, guess what? Now we've got more of supply. So then you see this retest here. That's only temporary, right? The news is temporary. Just because CPI drops doesn't mean this is going to come all the way down here. It comes down to a retest point before it decides it wants to continue up into its current move. Same thing with the government shutdown. So we have it 3 days in between. Rate changes. Okay, so rates actually come down. They do 25 basis points. We see a drop. 3 days later, government shuts down, right back up. Right? And with this, from this high, I can actually kind of foresee that as a valid pattern. So I'm bullish on the US dollar for the time being, but I'm overall bearish on it, period, because we still got 2 years to go after this. We're only in year number 2, so we have technically this year and then 2 more years while Trump is in office, and he wants to send the dollar down. He always has. So that would be the main goal, but it does need to pull back. So for the time being, this is kind of what I see on the dollar. Lower time frames, we're sitting here at rejection points where crucial times. That's why I say, like, when I was looking at gold could be coming down, not just because of what happened earlier last week with the margins changing, but also because people are going to sell off, period. Right? When you look at the chart on the high time frame for gold, it needs to come down. I mean, let's be real. I'll use this chart, right? So we have this bullish momentum move, right? We're in this channel. We see this is the top that was the highest high, and then we see this is the current high up here. You guys see it right up here. And it's dropped, but it's almost at the oversold mark. So this could be just a pullback for it to come down a little bit, but this is a rising wedge and needs to actually drop so it actually comes down to hit here. What's going to push gold back down to 34.75 though? I don't know. Unless people just need the money. So my outtake overall is, like I said, bullish moves on DXY for right now, which should cause EU to go down, GU to go down, GA to go up, right? So I don't know. We'll see how some of these things go through January. We take our trading day by day specifically, and take what the market gives us. But what this can actually translate to is be careful with your trading. Drop your contracts, drop your lot sizes, whatever you're dropping, whatever you're using, cut it in half for the time being. We're early in the year. It's still the first right now. And there's a lot that's going to be happening that could really affect the economy in general over the next month.
No, that's for sure. That's really good, Mike. Man, you gotta see. Look, I'm taking notes. I'm not any better than the next guy, guys. You gotta get rid of your ego this year. If you've got one, if you got some chip on your shoulder, get rid of it, man. Just come in focused and ready to just do your job. That's really what it boils down to. Is even though it gets you out of a job, it gets you out of a job to come into another job. This is a job. This is your career, and you need to take it serious. So with that being said, come into it with the mindset of I'm not here to brag or anything, right? Like don't ever get the feeling that testimonials is about bragging. Testimonials is about celebrating each and every person in this community. But more so it's about putting yourself in position. If I want to be a part of the testimonial celebrations and I want to, bask in that in some type of way, I need to be operating as a professional, right? You can take part in those celebrations and we can support you in that arena as well. But for now, a lot of you guys just need support in execution and making sure you're doing what you got to do week after week and staying responsible. You know what I mean? So, and accountable. So it's going to be really important for you guys, like even with this call, right? Showing up and making sure you're in position. Every call that we have is important. We're really not trying to waste time with you guys. You know what I mean? If you're looking to get coached and you're looking to get put in the right position to be successful this year, act like you're a D1 athlete and above, a pro athlete and above, right? You're getting that coaching, you're showing up because you want to be the absolute best in your field. So that's why we show up for everything, okay? And on time. So with that, I'm going to go through, US 30 and them really quickly. But it's not going to be too difficult, right? We've seen what we got going on with the dollar and with gold. So as far as I'm concerned, things came off really well with US 30. Go ahead, Mike, if you got something.
Yeah, no, I was just going to ask real quick. I actually have to hop off. I just wanted to make sure
no, you're good.
That before I left, that if there's any questions, I know Jackson kind of came in here. I if I'm not mistaken, you trade gold, right? Wait, what?
Uh-oh. Alvin? You had a chipmunk thing going on over there, Jackson.
Yeah, we didn't hear what you said, bro.
You might be getting it together. Give him a minute.
Yeah, no worries.
Or you can drop it in the chat too, whichever is the easiest for you.
You got me or no?
Yeah, we hear.
Okay, I say gold is one of my pairs. Just haven't really been too focused on it. I've been focused on GJ mostly, but I'll be starting on gold next week. I got one of those Alpha Trader accounts.
Okay, gotcha. So you missed the first part of what I was talking about here at the beginning. I don't know if you read the articles that I dropped, but margins changed for gold. So it's actually more expensive to trade gold now. That's why we saw the massive drop last week, because there was people either needed to add money to their accounts to sustain their trades, or they needed to sell off before they margined out. And a lot of people chose to sell off. So that sell-off caused the drop on gold. But from here on out, because brokers are now required to have a higher margin, it now is a little more expensive to trade gold. And I don't mean by contract size. I mean by how prices get hit. Like when you're using the contracts, it's based on each tick. When you're using by lot size, it's based on the pip. If you recall how like US 30 moves compared to, let's say, EU, they both move in certain, like a tick is a tick, right? But that value of that tick, you put that dollar amount value on it, but your broker has a value that goes with it based on the margin. And that margin itself is what has changed. So that's why I said if you're trading gold, cut your lot size, cut your contracts in half. I went from 10 to 5. So I was down when I was down. Oh, it's coming back. Let's go. Because I would have been down almost $1,200 a minute ago, because even though I used 10 contracts last week was different than this week because that margin went into effect. So when you decide to trade gold, either work with me on it, because that's all I've really been trading, or when you're finding yourself doing things on your own, just cut your lot sizes or cut your contracts in half and be safe for the time being.
Gotcha. And you're on London mostly, right?
I mean, I'm throughout the whole day. You know what I mean?
Okay.
So uh, there are times like through the beginning part of December, bro. I was working on a few hours of sleep because I was just sitting there scalping gold like you wouldn't believe, bro. That shit was awesome. But the holidays came in, and I ended up just kind of just throwing my account to the side. So it's a new account, new start, new everything for me. But I've been kind of scalping for the most part. So if when you hop into it, if you message me or tag me on a message in there, just based on any random question, you don't have to do what I'm doing. Just let me know if there's anything that I can help with.
Sounds good to me, man.
Yeah. Do you have any
Hey, Mike,
questions
thanks
before
for
I hop
coming
off
through.
though?
No, I ain't got no questions. I came in late. Caught a good bit of the after end, but I'm about to rewatch from the beginning.
Gotcha. Yeah, no worries, no worries. It was literally just kind of recapping me just talking shit. So the biggest thing that wanted to make sure that it was known was that portion because I could remember at some point you were trading gold. I know you were into GJ, but I thought at some point you were into gold. So if it helps you, it helps you. If you stick with GJ, none of that stuff's changed. You should be good to go for that.
Awesome. Awesome. Hey, Mike, bro, thanks for coming through for the yearly, bro. It's going to be very helpful. You guys know he is here whenever you guys need him and sharing valuable information. Look, man, a lot of what we're seeing, even with gold and silver, Mike had given us the heads up many, many moons ago. So this is fantastic. Again, thanks for coming through, and you guys are going to be very, very well prepared for the upcoming year.
Anytime, brother. Anytime. Glad to see you guys. Happy New Year to everybody watching this, and let's get this bread.
Yes,
Happy New
sir.
Year,
Let's make
man.
it a
See you
year,
later.
2026.
Peace.
Peace. All right, guys. So like I said, I'm going to go through US 30. I like to dabble into the indices. This year, I'll have high focus in gold, silver indices. For the most part, I'll probably be tapping in just because I'm looking at some things going on with GJ and EJ right now that look really good. But again, we've got to do TDA, right? So we've got to go through the whole thing to make sure we understand what is going on. So I'm going to go through a few. I'm not going to bombard you with them all. A lot of my list is a lot of doubles. You guys know I like to put myself in a position to try to take advantage of a lot of things happening at the same time. That's the same moves, right? So if US 30, NOS, and SPX are all moving the same in one day, I know I can tap 3 trades right there. But I do have to position my size correctly. Again, just like Mike just talked about, sizing. If you are over leveraging just because you want to make a lot of money, you're going to hurt yourself. There's no reason for it. Please just take the time out to have consistency. If you can't be consistent with 0.01, you can't be consistent with 0.1. You can't be consistent with point or with a whole standard. You know what I mean? So you're growing in an arena so that you can add size. But if you don't grow in the arena, you just add size because you just throwing at the one because you just want to see big numbers because of greed and ego and all the same emotions. Let's go emotionless here this year, okay? Let's focus on what's exactly being asked of us and how we can make sure we're working effectively, okay? So with that being said, US 30 guys, we're already looking at the 12-month. As you can see, last year was a very, very bullish, very prosperous year, despite many of the ups and downs. The year has closed out bullish. We also have the bullish fair value gap. So I'm not really in the position to say this is a market where I'm expecting us to have a bearish close at any time. I do expect a retracement, right? Typically, you guys know in lower time frames, we get a market close, we get 50% retracement or a 618 or a 786 for a big retracement. And that's what we're looking for to take advantage of. Now, in this case, we're going to break it down and see if that's still relevant, right? If it needs to pull back that far, or are there better entry areas that already exist currently? So with that being said, 12 months, as you can see, I have the 12-month fair value gap here. I'm already set up. Also, this is a 3-month support that I am working on a different US 30. It's a black bull that I'm currently using. And that's because I just don't want to mess up my own personal markup in my list. So I get to kind of go through it all with you guys step by step here. So now we go to the 6-month. In the 6 month, you can see same thing, nice bullish push. We have broken a previous resistance. Now, again, you'll see 3 month support. So as you can see, these wicks off of here are rejections. Okay, those rejections now have made a bearish market at the time. When you look at the lower time frames, that'll be the case. But then now we're above that, and we've broken that. And expectation to confirm this area is a possibility. So that is why I have this. So if it does go into a sell side situation, I know here's the target that I have in front of me that I'm looking for this to sell to. Now, next thing I've taken into consideration is that this 3 month could have been a part of the retest of this. Okay, so if that is the case, then what happens? This bullish fair value gap becomes the most prominent arena that I am looking for a retracement on. Right, we've got the quarter close. The quarter could use a retracement. So with that being said, I'm going to take my fib, go through, and just see where things are landing. Okay, I just want to understand what's happening. A lot of people get wrapped up in the fact of like, yo, everything's precise. I've got those indicators and all these tools. They're just here to help you tell the story and add into your understanding of what's happening in the market. So with the 3 month, I'm looking at where the golden zone is, or golden ratio, or whatever you call it, the 50 and the 618. Okay, these are important levels. I'm just marking along the way so that I'm aware as I go down of the zones being areas where I may look to purchase, where I might want to buy. Right, so this is my consideration. I'm breaking that down 3 months. If you want to add, you can always add in any note you need. 3 month fib golden zone, or you can put the 5618, whatever floats your boat. Okay. Now we're going to go down to the monthly. Now we can see that we've had some rejections here. You can see where the market has tried to close below and is struggling to close below this level. Some other information is a lot of the wicks, right? We've already got almost 2 taps into the 12-month fair value gap and a 3-month support. So a couple of things I can say here as well. If the dollar is expected to rise, right, more than likely that will cause the potential for US30 to come down, right? We are starting to get, as far as the monthly is concerned, smaller candles, right? So one, I'm expecting a 3-month quarterly retracement, which could happen if the dollar goes up. Then that would cause US30 to come down into this area and then look for potential buys. That makes sense to me if I'm trying to set up on the year and I'm saying, okay, early in the year, I'm going to get a retracement. Later in the year, I'll get a big push upside. Could potentially happen. Okay, so that's what I'm taking in as I'm looking at the bigger picture. So now down to the weekly. Weekly, we're already starting to get bearish kind of coming in. We don't have a fair value gap here on the bottom side. I do have this zone here. That was the zone that we had just a second ago. So if there's a reason for this market to come down this far, I don't really see too much of it, right? As far as looking at the candles, right? The candles are telling me the story. I don't have a fair value gap here. So is it really necessary for this support to get filled? Maybe, maybe not, right? I'm going to need at least a trend break of some kind for me to confirm that sellers have taken over. And as you can see, we're still making higher highs, higher lows, higher high, higher low, pulling up, higher high, higher low, higher high, higher low, higher high, potential higher low. So the only real reason that I could be looking for is the same thing, the higher low for me to potentially buy from. So for me, going into US30 and looking at just the higher time frames, I am going to stay aware of where I'm at in the current weeks. Okay, so I'm marking my weekly highs and weekly lows for the previous week, like I would always do. And then I'm saying something as simple as this: if the market continues to stay below 48,000, then I'm going to start to see that move towards this support level. If we get some bullish activity from here, like we normally would, right? We look for some type of snapback into this zone, and if I get that, then I know I could potentially look for this to just continue. At least back up into the previous week again, and then seeing what's going on from there. But this week hasn't even closed out. We're still in it. We'll see what happens at these levels. If buyers can come in, fantastic. We'll work that as we normally would, right? You guys already know how things work with the ITU snapback, so that's when we would make that play at. If we close out this week that is bearish, there is the possibility to make that move to this level. Okay. these are the kind of things you're going to be doing.
I have something truly special to share with you today. Have you ever dreamt of financial success and didn't know where to start? Look no further than Independent Trading University. At ITU, we offer a diverse range of courses, from Forex basics to advanced technicals, along with comprehensive fundamentals education, mindset coaching, health and wellness guidance, plus stock and crypto trading strategies. That's right. Everything you need for a well-rounded trading journey, all in one place. Our mission is clear, helping you make extra income by learning the art of trading. Join us today at solo.to/independent-trading-guru and take advantage of an exclusive pre-sale. $50 for undergrad students looking to trade part-time, and just $75 for career traders ready to dive in full-time. With ITU, you'll master the art of making consistent income from the markets. This is your chance to start building a brighter financial future. Are you ready to transform your trading game and take control of your financial future? Look no further than Independent Trading University, your one-stop destination for comprehensive Forex education and so much more. Whether you're a beginner or an experienced trader, we've got you covered. We believe in a holistic approach to trading success. Gain a deep understanding of market fundamentals, master your mindset, and prioritize your well-being. We're here to support your growth every step of the way. And let's not forget about stocks and crypto. Discover exciting opportunities and learn strategies to make extra income. The best part? We're running a limited time pre-sale for new students. Don't miss out on this incredible opportunity to gain the skills, knowledge, and support you need to succeed. Ready to make connections with your financial future? Visit our website at solo.to/independent-trading-guru to secure your spot in our pre-sale today. Independent Trading University, where trading dreams become reality. It's time to start your journey to financial freedom. Don't wait. Visit solo.to/independent-trading-guru now.
Right? Year after year, week after week, quarter after quarter, month after month. This is what I'm looking for. What time frame has most recently closed? The yearly. Okay, cool. So if I was on the 1 minute and I was tracking the 1 minute, like I tell you guys I used to do, I used to spend time watching the 1 minute build out. Not trading it, not doing anything, just watching it go and understanding what it's doing. Or can I recognize patterns or anything like that? So you would normally see, just watch the candles build. Candle will build, then you'll get a 50% retrace or 618 or 786, and then it'll push in the intended direction. Then it'll close. And then the next candle will do the same thing. And then the next candle, right? And then at 5 minutes, the 5-minute candle will close. And guess what? A bigger retracement would happen. Why? Because it's encompassing that entire 5-minute candle. So now your 50 and your 618 are a little deeper because the next candle has closed. That's bigger. This is the bigger candle, 12 month. So whatever the reaction is from that is what it's going to be. Then you got the 6, you got the quarter, so on and so forth. So that is how you are breaking it down. So January, February, March, come March, you know what, 3 months have passed, first quarter is done. I need to check the 3-month candle. Okay, June comes. All right, I need to check the 6-month and the 3-month candle. Okay, another quarter goes by. I need to check the 3, 6, and 9. If you have access to the 9. But if not, you check your 3 and your 6. Definitely your 3. This is the next quarter candle closing. The 6-month will still be in development, but you're halfway through it. You can at least see how that candle is moving, right? Where is it at? How's that developed? You guys get so lost on the smaller time frames and get destroyed because the bigger time frames, the whales, are what's moving the market. Okay, no pun intended. So, with that being said, that's what I'm looking for as far as US 30 is concerned. Again, you can go through NOS, go through SPX, do the same thing. I'm going to spend less time going through all of them. I'm going to spend more time going through one of the ones so that then you can go to the other and do the same thing. 12, break it down, boom, 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 boom. You come down with your big overall idea, right? This is big overall idea. This is not, I'm not going daily, 4 hour. I'm giving you 12, the monthly and into the week. So then we can have an idea in the big picture what's happening. And then once the week closes out, guess what? Y'all already know we're going to weekly overview and we're going to start working it out. Now we're going to get down into the nitty gritty of the smaller time frames, right? That daily, that 4 hour, that 1 hour, at 30, right? And I try to say small time frames because a big thing is mentally, right? Mentally, I'm training myself to understand that even though those time frames are big in the overall, you're not bigger than the monthly and the weeklies, right? And a lot of times we get into fear. People start to bring some type of fear with the daily and the 4 hour and stuff, and they're just smaller times in comparison to what's really happening with the bigger candles. So let's get into gold real quick. You kind of touched on it. I am in a current sell for the possibility of this drop that's happening. One thing I'm taking into consideration is simply just this gap fill. Okay, in reality, with gold, what I'm looking for, again, looking left to get right, is what are we going to do once we reach this level? Okay, do we need to check this arena one more time? The other thing I like to take consideration is sessions. Okay, we had the holiday. I would almost treat that like a Friday. Do we need to come back and retest the New York low just so we can make up for that time, right, due to the holidays, and then proceed into whatever the intended direction is? Okay, so as far as the sell, the potential is there. That's why I'm in it. That's why Mike is in it as well. One thing I'm looking at is the current 5-minute head and shoulders pattern that's in development here. So if that stays valid, fantastic, right? We can take advantage of that and get that selling real quick. But overall, he gave y'all the whole walk down on that. So I really only wanted to touch on that. You can go through gold euro. You can go through gold's not gold, gold euro. You can also go through silver and do the same thing, guys. 12 all the way down. Do your breakdowns like you should. One thing that does interest me going into this week, I'm not going to allow you guys to tap into yen itself as a currency. Please go through it. But as far as EJ is concerned, I am loving the possibility of bulls right now. As you can already see, I've got a beautiful bullish trend that's happening and very well in alignment with what I like to see in the market. Next thing I have going on here is you can see this double bottom. Let me get rid of the sessions. This here, right, the holding of this support is very, very major to me. As far as a potential indicator that we will not get much of a pullback, right? As much as I want to go up to the 12-month and everything else, I'm looking at this as one or two scenarios here. And that's either we're going to push from the fact that we have this double bottom going on here and go straight up into the top, or I don't even know why I have my apex fitted. Yeah, I got it fast forward, don't worry about it. Or we're going to retest the trend, right, and then proceed up. So those are about the two scenarios I'm looking for. EJ, I think this is really, really A+. I like what's happening here. I'm going to attempt both. I'm not going to take 10 trades on this. You guys can see it's two scenarios. Either one's going to happen or the other. It's the 50% for the double bottom. Exactly. So that more is what I'm looking for. And then the other thing is that's really interesting is just the candle development. I always talk about candle anatomy. I haven't discussed it in a while, but early on I talked a lot about candle anatomy. Again, it's just the build, right? What is happening with the candles? How are they forming? How are they coming into being? And we've got a nice 4-hour bullish engulfing. I like this other engulfing we had. So we're already starting to fill the voids within the move up. So that's why I'm kind of into a scenario where, okay, if the 4-hour closes like it does, and I get a nice 50% retracement, I'm all for buying it back up and keeping my stop loss at least to cover this fair value gap that you guys can see here. Just in case that gets touched in London or something, the possibilities. So if that does happen, I'm covered and it can still go into profit. But otherwise, if this gap here, this 4-hour engulfing gets broken, then I'm out of it. And then I'll wait for it to come back here and I'll take my second potential trade opportunity. Okay. So that's what I'm looking for as far as EJ. Again, do your due diligence and hit on GJ. GBP USD, also, I was looking at this pre-holiday. I did close this trade pre-holiday because I just didn't want to carry it over. I obviously could have done that, but as you can see, I am looking for potential bullish opportunities on GU. Now, that doesn't mean, again, that I can be completely wrong on this, but the reason I'm liking it is because this is something I've already been looking for, and it's in a position where I want to take advantage of it. Now, could this say that, yeah, dollar is going to drop because DXY, right? It showed you the triangle can go up or down, but something that's key on the DXY for that is that it had a major drop beforehand. So that kind of gave us a bearish flag type of look on there with that triangle. So if that's going to be the case and DXY is giving us the bearish flag, and instead of breaking up, it breaks out of the triangle Mike mentioned, then GU will continue up. We also have a massive wick down here on the downside, right? So with this doji, this pullback into this fair value gap and into this support level, as you can see, things look really, really good for GU. So that's why I had the buys originally. So now I'm gonna have to find me, I'm gonna find another way into this smoothing. Like I could use enter now, but as you can see, the 2 hour just closed. I do like the 2 hour filling this gap, matching this wick, and then being able to buy from that. So we'll see. That might be a play for me in London. We'll see what goes down with that. I do have to be aware of the bearish fair value gap here. We will need to get past that to really take this thing up. Okay. So what you're going to do is what? Go to Euro USD and run the play. Go through your top-down analysis and do what you have to do. Other than that, last thing I want to touch on is Bitcoin. Okay, you guys know I like to stay in touch.
In 2026, traders cannot afford to sit on the sidelines. This is the year of the action takers. The year you make a decision that changes everything. At Independent Trading University, we build an experience that brings together what traders have been missing for years. Mindset that keeps you stable, economics that keep you informed, technical precision that gives you direction. One complete system, one community, one path to independence. From January 14th to 18th, ITU Rise 2026 will take you through 5 powerful days of coaching, clarity, and next-level growth. This is your chance to level up with your coaches live, build your personal trading plan, and finally break the habits holding you back. General admission is free. VIP access is optional for those ready to go deeper. VIP $27 admission includes morning motivation with Daniel, pre-session Q&A 6:30 p.m. Central Standard Time, recording access for 7 days. Enjoy 7-day enrollment to ITU. Part of admission will be donated to the Grace Works program. Receive a discount on the ITU 30-day bootcamp. Digital copy of ITU Trading Guide $4,000 worth of value for $27. Whatever path you choose, one thing is certain. If you want 2026 to be different, this is where it starts. Register now at rise.myitu.org. ITU Rise 2026. The year of the action takers.
What's happening with our girl BTC. So far, like I said, I have 2 scenarios. As you can see, we did have a major drop here, which broke the bullish trend that we were on from previous. As you can see, we've been on this trend, and we've talked about this many times. We've been on a nice bullish trend for a while. Had a bullish flag opportunity here, do the same thing here. Now we're getting another push down, but we've exceeded what we saw previously. Does that mean it's over? It's going to be up to the market, right? It's got to tell us what it wants to do. So far, what is in our favor as far as bears are concerned, we have the head and shoulders pattern here on a daily valid time frame, strong enough for it to drop from. We've been holding the price of 88,000 500, 700. You can see just been bouncing back and forth. Consolidation into the year activity makes sense that that's happening. But if we don't get a break above 88.5, we could probably see 92. Okay. If we do stay below, I'm looking at a good push down to 75,000. I'm being honest with you. I don't see any reason, for this to not make it down to this level. Okay. If the Bears are going to stay intact. So this is going to be a very, very crucial point. We'll see what happens. If I'm going to get involved with bulls, as you can see, and I've said this before, this is not a chart I've changed and touched too much. I kind of like to give a big, broad outlook, and then we follow that and see how it builds and follows. So with this, I need this push up and retracement onto 92 to continue that wave. Okay. I'm always trying to be in flow. I'm not trying to be the first one out the gate. Could I put, down, let's say I'm trying to position myself, possibly I could look to add in some point here just to see how it plays out. Am I going to go balls to the wall? No. I'm saying? I'm not trying to give any financial advice or anything, but I'm just saying test the waters if you feel like you need to test the waters to see how things go. And then you can add in as you get above 92 or the 95, right? Be smart about this. Let's be aware of what we're doing here. And if things look shady and look like they're going to drop, then you take a small loss, right? Be smart. Be very, 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 very smart. And then XRP, it's whether or not we need to come fill this wick. Okay, and one big thing I like to do is to measure wicks like this just to see where the 50% slide, because sometimes those fibs land in a structural area. Okay, just measuring the wick. So if I'm looking at a potential buy opportunity, I'm coming here, I'm looking for where there's previous support and resistance, which you can see there's here at $1.21. You can see it's strong here at $1.62. So with that being said, these are just areas you might want to have that are of interest to you as the market continues to make its way down until it finds a support area. But as long as we stay in this trend, as you can see, I've kept a look at a major trend that happened that caused the big push, and then this is the new bearish trend kind of we've been following thus far since then for days now. So we'll see if it breaks out. We'll see how we hold the big bull trend. As you can see, I'm starting this as a starting point. But as far as I'm concerned, let's see this number. I'm going to go to the week, so I want to see if this is lining up in a trend or if it's starting to stagnate. So those are about the two bullish trends that exist from the weekly. Okay. And then this is a oddball rejection, but I mean, it's literally off of the bullish fair value gap that we talked about many months ago. So it's just now a matter of if it's going to commit to it or if we're going to go back into that arena. One thing I am watching is that the RSI, when this happened, right, this had to be manipulation because it didn't even reflect here. So if it's going to justify something like that, it's going to come fill up some of that price. But some of that money got to be accounted for. So that's kind of what's happening there. Other than that, man, that's the gist of this. We'll hit stocks more in the community calls just to see what's looking good as the week goes in. Again, those are more long term, right? We're buying and holding in some of those arenas. And if that's going to be the case, I kind of want to let the year close out as far as this week is concerned, and then come in next week, and then I can see him. But other than that, guys, dude, that's the yearly. One thing that's really big is you guys in the community have had milestones. Number one, if you think about riding a bike, if you think about a baby walking, you are in that position, and you have made leaps and bounds from where you started, from knowing nothing to being able to now understand and adapt to markets, understand what's happening at economic levels that you probably never even would have touched before. And now your family has an open door through you to understand how these things work. This is what is so major about what we do, is we have access to information we never had before, and we're able to utilize it for economic gain like we've never been able to before in many communities. So with that being said, 10 things you guys can do to be successful this year. Respect the market caps and late cycle conditions, right? Earlier in the call, I might talk about gold and other metal assets that are reaching market cap extremes, which often signal reduced upside and increased volatility. Okay, so we just talked about the sell. Go back and recap. You see more of that. But late cycle markets punishing, chasing, right? It's going to punish you guys if you're chasing markets. You're forcing things to happen that aren't even there. It will reward you guys being patient and being very precise. So shift your mindset from just catching moves to protecting that capital. I might talk to you guys about that before we got off the call. We've got to be very well aware of what we're doing and making sure A+ setups only. That means everything in your checklist that means A+ should be checked off before you buy or sell. Very simple. Don't complicate it. Okay. Next thing, number 2, adjust to higher margins and tighter liquidity. Increased margins means less leverage tolerance for brokers. If you're trading gold, trading silver, please be careful. These hikes that's happening, now we're hitting that market cap, the margins are really, really out of control. So position sizing errors get punished a lot faster. Trade smaller, cleaner, and more selective setups. Next, with the gold as well, especially metals, all the metals, really, watch those bid and ask spreads. Okay, wider spreads to reduce your risk to reward, even on a good setup. So it could be a great setup, but because of how your bid and ask spreads are, the spreads on gold are, you're not going to make as much as you normally would. And a good way to find that out, Apex. Apex shows you when you try to go trade gold and stuff, it'll tell you, hey, you're going to look to make this and that. Even the gold trade I'm in with him now, it's like a 1-to-1 almost, or like a 2-to-2, something like that. But I'm like making 500 or I'm losing 500, right? So I'm 1-to-1 in this trade. So it's really not the best trade opportunity for me. You guys know I like a 3-to-1 type setup or something. But for a quick $300-400, I'll take it just to get loose in the game again. But again, watch those spreads. Watch those spreads. Next, number 4, trade interest rates, not opinions. Okay, rate changes drive equities, metals, crypto, and foreign exchange. So focus on expectations, not the headlines. Whatever the real announcement will be for interest rates is what it will be. Align your trades with the direction of the monetary pressure, where that money needs to go. Again, stay tapped in with Mike if you need to be aware of that. Prepare for policy and government shocked events. Government shutdown into the month. You guys know that. Any funding issues, right? They just went through that a few months ago. We could see that again. Any fiscal delays and distorted data, things that just aren't adding up. So expect irregular volatility and any fake moves that are happening, and then reduce your exposure, high uncertainty in some of these windows of opportunity. Be smart. Track consumer stress signals, okay? If you see, kind of like we did with 2020 and many other times, with rising inflations and stuff like that, if people are not buying like they normally would, might be some issues. Gas spending, right? That's going to impact stock market and sentiment. Rising healthcare costs due to risk appetite, and then weak consumers, right? You get choppy, range-bound markets. That's going to be a possibility this coming year. Understanding healthcare and how things are ripple affecting from Ozempic, okay? So the food consumption trends, healthcare pricing structures, insurance and employer costs, we're expecting 200-300% rises. You know what I mean? So these shifts are going to create some sector rotations and not straight trends like we normally would like to see. So like I talked about earlier, I'm looking at United Healthcare and things of that nature in the stock arena. These are things I need to be aware of that are happening. So anticipate any insurance changes or employer cost pressures in that environment. And this is kind of 7 and 8 are going to kind of combine in that factor. So healthcare cost hikes hit for number 8, small business changes, middle class consumers, wage growth expectations. This pressure shows up in indices right before the headlines even talk about it. That's why I like tracking indices, because a lot of times you're getting that information you need to get, like we just went over, potential sell-off happening. And if that's the case, news will reflect it later on down the road. Number 9, expect price stabilization, right? No cheap prices, things will stabilize. Again, we're in a growing, right, inflation. right? Rises as we go. So I would not expect things to drop in a massive fashion. I would expect it to balance out, just like when the minimum wage was $7, right? Prices just balanced out. Then we went to 15, what, right? 16. You know what I'm saying? It's not really changing. Nothing's, this is when they say rich get richer, poor get poor. It's not a sense of changing and how much we're making. It's changing in mindset. Okay, never forget that. Trade with the reality of rising cost of living. Okay, Midwest, guys, prepare. One thing that was really big for me is when I got into Oklahoma City, is recognizing that it was way beyond the times as far as where I was from. So once I got a kind of clear view of that and understood countrywide where these different sectors are as far as technology and time is concerned, Oklahoma's caught up. Oklahoma's caught up. Oklahoma is also destroying in the basketball arena right now. So with that being said, prices are expected to go up. Same thing with Wall Street moving to Texas. Prices will eventually go up. More and more expensive people are coming. This is what it is. So you've got to get yourself in position. So even if you're not even looking at the AI standpoint of this, you should be looking at the fact that as long as inflation continues to rise, you need to be able to keep up with the pace of how money is growing. Okay, you need to be able to do that. You need some extra vehicles. Okay, so that's what we're here to do. Here to make sure it happens. Final reminder. Okay, this is not a go big year. This is a go precise year. Fewer trades, better structure, stronger discipline, capital preservation first. I don't want to hear nothing about nobody blowing an account in a week's time anymore. You're doing too much. Stop it. You should be able to make it at least a whole 30 days. At this point, in the beginning, another story. At this point, make it through 30 days on the account. And I bet you might see some different results. Because you can have one bad week and the next 3 could be straight fine. But if you can't make it 2 your good weeks, you can't make it to success. Okay. So the traders who survive this year, clean, will dominate through the next cycle. Okay. Final words before we close out. We move forward, right? 2026 is here. It's not just about trading anymore. We're thinking better, we're executing a lot cleaner, and we're surviving the noise. There is no more, I'm just taking this trade just to take this trade. Make sure it all aligns and makes sense. Even if you're scalping, you can't be scalping and not be in alignment with what's happening in the other time frames. Every time frame has a place in every style of trading. Okay? The market environment will reward traders who do these things. Respect risk over reward. Okay, some of you guys are getting really good now in understanding that your account size is not your account size. Your stop loss is your account size. Simple as that. Right? You're getting smart with your risk. And due to that, you're able to size correctly. You're able to add in when you need to add in. You need to be able to come out when you need to come out. And you don't even care. You're like, oh, $50 loss. $30 loss. Not a big deal. Exactly. Now we can really get to winning. Because we've gotten ourselves to a place and have a comfortable level of risk. Next thing, understanding macro pressure before entering positions. We are checking news. Okay, if we're coming in that day, we're checking news. We check news Sunday, we checking news again every other day just to see it. Matter of fact, when Sunday comes, you already have your specific red folders. So you can put on your calendar, hey, these are the days this news is coming from my pair. I need to be aware of that day. And then I'm just checking to see if there's any updates along the way. Monday might not be nothing. Tuesday, something may pop up. You never know. So just staying attuned to what's happening in the macro pressure of the news. Trade structure, again, not emotion. It's not a field-based industry. I don't feel what's happening. I see what's happening. I see it's at my support level. I see it's built a candle pattern that I can work off of. And then treat trading like a business, not a lottery ticket. This is a year where discipline beats aggression and preparation will beat prediction. So don't forget, as we go along, ITU Rise 2026, this is where it's going to start for some of you guys, some of you along the way, and this is going to add into. If you're serious about aligning your trading with what's coming next, not reacting late, ITU Rise 2026 is where we reset that standard, guys. So from January 14th to the 18th, you guys already know, 5-day live trading mindset event. We're also going to go through economics. So it's designed to help you guys in the macro environment, shaping 2026, rebuild your risk model for modern markets, eliminate overtrading, greed, and emotional decision making, create a repeatable execution plan. VIP guys, we're going to get into it deep. So please be prepared. Transition from hope-based trading to a professional structure. We're going to have a high level of performance. Please do not have LeBron level ways of thinking and not LeBron level ways of work ethic, not LeBron level ways of practice, not Kobe level ways of practice, right? If you want to be the best, you got to operate it as the best. And to do that, you're coming in with your mind right. Okay, this is not hype, this is preparation. I'm not trying to just get you guys riled up. This isn't a motivation call, this is serious business. We're trying to make some real serious money here, and we will not be playing. The other thing is this: if you guys are out there and struggling to share what we do, how we do, what you do, remember, you're the gift. You know what's so nice about this industry? It's the rarest of people that even get involved in this field. Very, very rare, number one. So meaning when you're in this arena, you are in the power seat. I mean, I'm gonna be honest, people need this. At the end of the day, it's a lot of people who need this, whether they believe it or not. Fact is, you need this vehicle or vehicle in any business arena where they can build something of their own, or they can put themselves in the position to win and to be successful in this coming year. Don't operate any lower. Do not lower your level.